All right, what's going on, everybody? What a day. Market's currently up 613 points in the Dow, the Nasdaq up 2%, 382 points, S&P 500 up 88 points, 1.5%. The Russell at one point peaked over 3%, but at a comfortable 1.65%. The VIX down nearly 2 points. How's it going, Ali, Jean, Gloria? Welcome, everybody. Welcome. Thanks for hanging out. Whoa. You know, uh, it's not, I guess, too much of a surprise. Three out of the last four CPI dates, we have seen the market rally the day prior. All four of the last CPI reports, the market has opened much higher. Now, on some of those days, we have given back those gains, and some of those days, like today, we have looked to stack on those gains. So far, we're slightly above where we have opened today. But the question is, what is now the market processing? Well, this is on the heels of the PPI data, right? And the PPI data obviously helped lift the market, swung us back, and then of course we started to rally at the end of the day, and then we started pulling back, and it was really wild. It was almost non-directional and very confusing, and it kind of led to me not being sure on how the market was going to react. But the news actually wasn't like you know, amazing. Basically, everything came in line with expectations. Core came in a touch lower than expected. There were a lot of fears of inflation, of course, and how high this data point was coming on. So this is kind of a relief rally that inflation isn't as bad as it seems. Now, Michael, I'm pulling my chart up here. So if you want to flip it to the screen, here we go. So, one of the things that we have to look at very closely as well is that we have been in a pretty significant downtrend now. Hopefully, everybody could see my drawings, but you could see we've been in this pretty strong trend channel. The SPY is at a critical pricing level near the 50 SMA. And this is where, we're seeing a lot of risk off trading, but buyer demand is still trying to prop the markets up and push it higher. However, until we could either break that trend line and or close above that 50 SMA, we have to be very cautious of the downside. It's the same thing with the Qs. The Qs are actually above the 50 SMA, but once again, approaching a very critical price level, the 20 simple moving average and the linear regression mean. This has been a pretty key price point. If you actually look back just a few days ago, the Qs hit that price. We ended up opening below the 50 and spilling all the way down. So, what does this mean for tomorrow? Now, tomorrow is going to be a really interesting date. I'm sure there's a little bit of lag in the chat, but um, what is expected tomorrow, from my opinion, is a lot of volatility. I want to explain why. Monday, obviously, Trump is going to be officially inaugurated as the president of the United States of America, but we also have the markets closed on Monday for MLK. And so that means we have a 3-day weekend. And the markets um, tend to be fairly inactive the day prior to the longer weekend, because everybody likes to take off a little bit early and kind of extend that day to almost a 4-day holiday. This is really interesting because we've had a really volatile start to the calendar year. I'll highlight where we started the calendar year at, and where we've been trading. Let me redraw that. I could do better than that. This has been the market activity since the start of the year in the box. So we've swung up, we've swung way down, now we're coming back. And volatile times generally isn't bullish. That's something that we have to kind of understand. When there's volatility, it usually leads to weakness. A lot of this volatility is directly attributed to the 10-year and 20-year yields really soaring. The 10-year got almost as high as 4.9, 20-year peaked above that 5% mark. So with volatility and a long holiday weekend, seeing how the market has traded could lead to a really volatile session tomorrow. And the reason being is that they being traders, bankers, and everybody else may not wait until option expiration this Friday, which is the monthly and the weekly expiration ahead of the 3-day weekend to either liquidate their positions and maybe start building out new positions. A lot of the times I believe it's 5 out of the last 6 monthly expirations. We've seen greater volatility and price range movement in the markets on the day prior to expiration, which would be Thursday. And this is why all signs tomorrow could lead to a really explosive day. Now, it's either an explosive rally, which means that the SPY is probably going to prop up above the 50 and really break out above, and the Qs are going to have to break out through that 519, 520 level, or we're going to see this recent rally, right? We rallied yesterday, we're strong today, and even on Monday, the Dow was up over 300 points, and while the Nasdaq and S&P didn't look like they rallied strong, they actually did come up pretty nicely off the lows. Even though the Nasdaq, I believe, finished down 47 points, the Qs opened at 501 and closed at 505. So they made more than a 200-point rally intraday to only finish down 47 points. So that could lead to this short-term rally having a major, culmination where we either fall off and retrace back to where we were on Monday due to the high volatility and perhaps positioning and liquidation, or the momentum can continue and we could rise up and power through these key technical levels. Now, that's why I wanted to bring up specifically the SPY and the Qs right off the bat, is that we need to know where our barrier points are. So in the Qs, everybody, let's just say 520. That's the threshold we want to see the market cross and stay above. Okay, keep that in your notes. And in the SPY, there you go. We want to get above 595 and prop and hold above that level. And that really leads to the idea that we can make this push to 600. And if you think about it, that's a really nice update. It'll mirror somewhat not as nice as today, but something more similar to what we would be accustomed to in a nice little run up in the markets. We're very close to just saying, let's go, right? And of course, the market. Could really effectively change with the change in leadership as well. There's a lot of people that are anticipating that the day after Trump takes office, there's going to be a lot of different sectors that are going to be moving up very nicely. In particular, the financial sector could be one, the industrial sector as well, and the semis are going to be an early watch. One of the last things the Biden administration just issued was the restriction of chips being sold to China, especially the AI-based chips. We'll see if Trump's, administration really want to carry that over. I believe Senator Blinken actually said they believe that the Trump administration is going to carry that over as well. So that's going to be really interesting. And again, if the semis start soaring, the Nasdaq is going to be soaring, and we're going to be making a big move. And so, talking about the semis, folks, and I know that there's a little bit of lag in the chat, but what name do you think, all right, that I am going to mention here? And by the way, it is going to be the word of the day. So, Michael, keep this on your notes. But which semi stock do you think I believe is going to be the best performer in 2025? Throw your guess in the chat, folks, while I drink out of my big old Starbucks Stanley Cup. Let me know which semi name you think. So we got TSM, NVIDIA. Palantir is more of a cloud-based name. Micron, MU, NVIDIA, and TSM. NVIDIA and TSM would definitely be very, very popular here. I'm not surprised. Micron is up there. I'll tell you right now, there's no chance that it's going to be AMD. I'm sorry, Clive. So we've got AVGO, NVIDIA, AVGO, AMD, SMCI, ASML. That's actually a pretty good guess in terms of percentage gain. Remember semiconductor names. Now, Microsoft is kind of working on some of their own kind of GPU type plays, but let me tell you, they're going to be dependent on NVIDIA going forward. Uh, it's those that said AVGO. And if that surprises you, well, AVGO's earnings last quarter was so significant and that put them into this outer space territory. Now, they have struggled to regain the peak, which is at 251. But I think that time is going to come soon. And I believe that time is going to be when it starts breaching above this like 235 price point. Now, that's going to be breaking this pretty effective trend line that we have seen in the stock. That's going to mean the stock is going to recapture above the 20 SMA. And of course, what's really important is that at that moment, they break those highs. And that's really where I think the turbojets turn on the stock once it breaches that high, because it's signaling to the market that demand is in the picture. And perhaps right now, the markets have been in this kind of corrective stage. They're really, really suppressing a lot of the semiconductors and preventing them from making new all-time highs, with the exception, I believe, TSM has just done it. But it's as if the market's saying, well, we are beyond where future valuation is. And that's where I think AVGO kind of stands out, because of their guidance in their last earnings report was so positive. So this is definitely one of those names that I am going to be keeping on here, a really close eye on over the next 3 months. I don't think you're far off on Nvidia. I will state that I think that AMD and SMCI are going to be some of the worst performers out of the sector. And I still am in the boat that Intel is by far going to be the worst. There are two other names that do stand out that could also take away that crown as well. A few of you have mentioned Micron. Micron is certainly of interest, but remember, they had horrific earnings. So for me, the recovery is going to really be facilitated on how well they perform on their next earnings. I have a hard time, unless this market goes really, really north, that Micron is going to power through 115, because that opens the door for them to fill the gap and potentially recover strongly. This is the other name that I believe could have tremendous upside this year, and that's Marvell, MRVL. This is another stock very similar to AVGO that is propped up on their earnings and has been able to maintain those gains. Usually, if the markets feel that a stock is way beyond its valuation, they would have absolutely rolled the stock back to, at the very least, the gap fill range, which is down here, or perhaps even further. And if you look at the chart of AVGO and you look at the chart of MRVL and compare it to others such as Micron, which is MU right here, AMD, which is looking like this down here, right? And very significant downtrends. Even SMCI, let's not forget, folks, people are way too forgiving on this name. Okay, let me try this again, Charlie. SMCI, people are way too forgiving on this name. They're still under subjected investigations to a degree. We have to see if their numbers are really going to come out the way they are. We have to still find out that the numbers are what they say they're going to be when the earnings come out. And, for me, I find the value of SMCI to be attractive in the sense that they could be a takeover target, but not as a great performer. So this is something that I want to keep an eye on. Now, there are some mentions for names like LRCX. I am a big fan of LRCX. If you actually look very closely here, LRCX has started to finally bottom out, just like AMAT. And for me, this bottoming out effect really comes into play because they're getting into this really strong consolidation period. Now, it's only bullish if we break north. And if we break north, LRCX could be a powerful performer. But until then, they're range bound and they're stuck. I like the idea of ASML being in a recovery because I felt that their drop was overblown. But even then, that recovery could be very muted. They tried to break and run and was knocked back, but certainly has the potential of racing back somewhere between 850 to 860 and getting onto the road of recovery. ASML is well off their 52-week slash all-time highs. So there's definitely room for this stock to try and move. However, Wall Street doesn't necessarily feel the same. Um, you know, in terms of breakout thesis, breakout demand as of now. There is a point of recovery. We are starting to see a longer term trend reversal. I would say the projectable right now is somewhere between 825 to 850 in the near term. And then we'll have to wait and see what's going to happen. Right. Um, Now, just so we're all on the same page, we got a decent amount of viewers in. Hopefully, we'll get a few more. Do me a favor, folks, really quickly. My man is trying to get the name on the wheel. Okay, started it up. So, everybody that wants their name on the wheel, you are going to type in AVGO. That's the word of the day. It's really the ticker of the day, but AVGO, I believe, is going to be a wonderful play. Now, again, I want to fall back on the expected moves tomorrow. It wouldn't surprise me to see the market swing 2% up or down or even greater. And that's something that we have to kind of keep in mind. We also have to keep in mind that we have had a substantial gap up today trading into resistance. And so the attraction in this instance would actually be by the short sellers. If you're wondering why, it's because they could potentially take a smaller risk trade. Let's say that white line would be the risk factor. And then this would be their reward potential, perhaps even spanning out to the recent lows. And so, if you think about this, well, the markets, since we've hit our highs, have been in a really consistent downtrend. So, it's not like we've been in a near term uptrend by any means. We've been effectively working lower since December. And it's in essence, the markets haven't been the same since the last FOMC meeting. If you're wondering what I'm pointing at, I'm going to erase that. That big sell off day was during the last December FOMC meeting when Jerome Powell was speaking, and they guided towards lesser rate cuts this year. Remember, they adjusted their dot plot. January is in doubt. March is in doubt. Heck, even they're saying perhaps June and July might be in doubt. And they may only look towards the latter portion of the year to make this rate change. Now, that means that economic data going forward is really important. Things like consumer sentiment reports, the hesitancy by the Fed is largely attributed to the idea that the economy has remained very strong and resilient. It's why they opened their statement saying that the economy is showing a lot of resilience. The jobs report seems to be pretty important. More importantly, like kind of maybe um, wage gains or growth, unemployment rate as well. These may be really key metrics. So the jobless claims numbers that come out every Thursday could be effective. And again, that's something that we're going to have to see tomorrow, how the markets will react to the jobless claims numbers and how we're going to trade right ahead of options expiration. Okay. Folks, if you like what you've heard today, do me a favor. Since you're here, there's 90 of you. If you're on YouTube, there's a little thumbs up button under the video. I encourage you to click it if you like the content. You like the content that we bring out every day. It helps us obviously get more exposure into the social media verse, the YouTube verse. If you're watching from other social media sites, do me a favor and click that like button. It may be the shape of a heart, maybe a thumbs up, whatever it is. But anytime you do that, we are greatly appreciative. And of course, you are extremely helpful. Um, Final thoughts about where we're going to be. I think tomorrow is going to be a really great day for the day traders. I think that those that are looking to position themselves today are taking a lot of risk. It would be in the scale of the same type of risk that we would be taking if we took trades yesterday. The AI program that I run had some really quality setups, and I kept telling everybody as I was reviewing these, this is a great trade idea, but like I said, the setup doesn't matter because the market is effectively in a position to make a very substantial move. So you're in it for huge risk, huge reward. Your stop level prices won't matter because we'll either be stretched beyond that level or way above that level. And that's the same thing, folks. If you're looking to position yourself today as a trader, you have to kind of look at tomorrow with the potential same fallout, right? You're like, well, maybe I'll risk 50% of my premium on the contract. Well, quite honestly, depending on what your expiration is, you may be risking 100% and not know it, especially if you have a stop order in and it could just obviously trade you and stop you out at a much lower price than you expect. So you have to be comfortable with the big risk. But what comes with the big risk is great reward, right? So imagine that we make another 2% move. Well, that means that certain stocks, I don't know, like Tesla could rally another $20. Why the heck not? Names like Coin, which is up nearly 19, $20, they could make another move for another 10, 15. Why the heck not? And so if you're looking for that scale of return, then you have to understand the scale of risk that you have to allocate. So does that make sense, everybody? Yeah, listen, Paul says, mash the button. Trump can't fire Powell. No, he cannot fire Powell, guys. He cannot. In fact, Powell, during the December meeting, flat out said, Trump can't fire me. Look, I also want you to know that Jerome Powell was appointed by President Trump. And at one point in time, President Trump did want to fire Jerome Powell. This was in 2018. But that being said, the Fed makes its own moves and it's going to move in relation to what they have stated. They haven't changed their tune, right? They have been very, very, very direct in their approach. And yes, maybe they moved a little late. They admitted that as well. But that's why they were aggressive in those rate cuts and those rate hikes as well. And because of that, we know the Fed can move at an accelerated rate, but there's no reason for that for the time being. Um, I guess the 10-year and the 20-year will kind of help decide what the Fed actions are going to be as well. But if we start seeing that retracement, and here, let me just pull up TLT really quick. If we do start seeing that retracement in yield and the rally, of course, then we can make a pretty effective move. Now, the TLT asset needs to power up above 87.42. That's going to be really tremendous. There's a massive profit pocket up to $90. When I look at the 10-year, I am always looking at the futures contract /CN. And they right now have pivoted and now are looking to test the 20 SMA. Folks, they haven't tested the 20 SMA since December 13th. So if they recover above that level, once again, we could see a significant jump in bond prices and, of course, a fast drop in yields. And again, if you don't know what that means that's bullish for the markets. So now we have the Qs, we have the SPY, and then we have the 10-year all approaching these key technical levels. So we know what we need to do. We need to power above and race above. So tomorrow, folks, depending on how we open, depending on what we do at those levels, that's going to be a very direct correlation with how the market performance is going to be. We don't need to overthink things, right? We know where our key levels are. And if we can't get above, well, we usually go sideways or go down. And if we can't go down past the level, we'll go sideways and go up. But generally speaking, those will be the pivot levels to watch. We are approaching all three in these three major markets. We're going to see where we are by the end of the day. And again, if we remain below these levels tomorrow, well, we may not get the bull rally. In fact, we may get a massive washout. Again, I'm anticipating tomorrow to be a really big day. Maybe not on the same scale as today, perhaps possibly even more. It really just depends, how we trade at those levels. I expect it to be a lot more volatile than Friday, but we'll see. Maybe I'm totally wrong. And Friday is the day where everything goes crazy. Again, usually ahead of a 3-day holiday weekend, the traders, Wall Street likes to take it off a little bit early. Maybe the activity will be in the morning and not so much in the afternoon. So let's see. Let's see, folks. Last chance. Okay, everybody, for the wheel. Again, final call. Type in AVGO in the chat. Okay, AVGO in the chat if you haven't um, your name on that list already. So SMCI, for those that are interesting, you could see that they've had their rally a bit stymied. They'd actually worked down, if we look very closely, to the lows of the day and made new lows here. Let me pull this up, pull this chart up. They ended up making new lows for the day, ladies and gentlemen. So that really doesn't tell me anything about being bullish. I do think that a reversal is in the picture right now because they've climbed back above the 50. But the fact of the matter is that they've given up their gains. They went negative for a brief second. And that should tell you something. Again, if this is a highly demanded name, wouldn't we see the stock positive on a day where the markets are very positive? That's certainly going to be very critical. Oh, look at the AVGOs. Meta's an interesting name, folks. Meta and Snapchat. Now, Meta is an incredible performer, but there's too many people that are not talking enough about Snapchat. And I get it. The big money is in Meta. Obviously it can move horrifically and crazily. But Snapchat is one of these names that I absolutely love. I think they have the ability of making a real big push towards this 16, $17 price level. And they're trading at around $12 right now. So where they need to break out and hold. They need to break out and hold above this 13.25 price. They're in this tight consolidation range. And if you're wondering why we should be effectively looking at these names, because TikTok is set to shut down their US operations this Sunday. Okay, this Sunday, folks. So, uh, you know, everybody looks at Meta. Yes, is going to benefit, of course, but if you understand the social media world, I mean, there's not going to be that much of a difference and carryover into Meta because the numbers and metrics of Meta remain very consistent because they are the powerhouse, right, along with TikTok. But if we're going to talk about which company is going to benefit greater, Meta or Snapchat, in my opinion, it's going to be Snapchat. Now, there's already a lot of talks about the another Chinese app that's being used and and I guess it's like blowing up on all the app stores. But frankly, it's going to be a company like Snapchat that will see a lot more of the residual ad revenue and a lot more, I guess, increase in MAWs and DAWs. If you don't know what DAWs is, that's DAU and MAU. I'll type it out here. Uh, DAU MAU. For those that don't know, that's daily active users, and this is monthly active. And if this is the bottom line metric that's utilized to judge these social media companies, because when these metrics are up, that's also ad revenue being increased for the company, and obviously that's the bottom line for these corporations. So If there's any company that's going to be able to benefit greatly over Meta on this TikTok ban, it's going to be Snapchat. So just keep an eye on this 1328 breakout here over the next few weeks. We'll see if it takes place. All right, everybody. So, what you've all been waiting for, and I appreciate you all. Ooh, the Wheel of Names. All right, everybody. Good luck. Oh, it's red note. Thank you. Thank you. Good luck, all. Let's see who today's winner is going to be. And today's winner is going to be. Oh, it is Thomas Swift. Thomas Swift. Congratulations. Um, do me a favor. I think Michael's gonna post it up there. Send us an email with your information, and we will get some swag out to you by next week. Okay, congratulations once again to Thomas Swift. Now, wrapping this up, folks, and I just want to say thanks for your time and your participation. Again, if you liked what you heard, do me a favor, hit that like button, that thumbs up button, that heart button wherever you're watching. It keeps these streams going, keeps these streams live, and of course, it only helps us out. We greatly appreciate your participation. Tomorrow, the great Mike Shore is going to host. I'm not sure what he's going to talk about, but nonetheless, that's the man, the myth, and the legend. And then, of course, him and I are going to simulcast, I guess, or be in the same studio, virtual studio on Friday, and we're going to do this together. Friday should be really, really fun. So, with that, folks, I just want to say thanks for your time. Peace and love, everybody. Hopefully, you kill it for the rest of the day. We'll see what happens tomorrow. And until next time, I'm out of here.